The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 6th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential is something we must master each and every day. So let's begin with a few empowering beliefs. This morning's beliefs all brought to us by musicians out there. The first one from Jim Morrison. He said, expose yourself to your deepest fear. After that, fear has no power, and the fear of freedom shrinks and vanishes. No question about that. The next one by Bob Dylan. He said, what's money? A man is a success if he gets up in the morning and goes to bed at night and in between does what he wants to do. Now there's a lifestyle. That brought to you by Bob Dylan. Then the last one here by none other than Frank Zappa. He said, without deviation from the norm, progress is not possible. Well, let's go check out the progress in these markets here. Right now we've got the Dow trading off 88 points out at 15,524. S&P is down 7 at 1,700. Even Steven. NASDAQ is off 15 at 36.77. Russell 2000 down 8 points at 10.54. NASDAQ 100 off 10 at 31.32. New York Stock Exchange off 47 points. That's been the leader here that's been indicating that the market has got some troubles because the bears are in control. If you take a look at the wider breadth of the marketplace, well, they're certainly beating their chest as we speak right now. We've got gold trading down $21 at $12.81. Silver's off 21 cents. That's off 1% at $19.50. Light sweet crude is off $1.13. But nothing going on with the U.S. dollar index. King dollar is down about 15 ticks, trading at 81.78. So we'll go check out all these moves, see if we can figure out what is going on. Our call number is 877-927-6648. Give us a call. We can take a look at your stock chart. We're going to start off taking a look at the little bit larger picture. We're going to look at the 120-minute chart here of the ES Mini. It has been, there's a 23-point consolidation trading range. The top of that range is where price is traveling into right now, which is the 1695, 50-ish area. You're at 1695 as we speak. We're going to see during this 120-minute session, which, by the way, this one here does not conclude until 11:30, so it won't be until during Basil's show. But we'll get some type of indication during this segment here as to whether or not this was a false breakout on the highs of 1704. Were it for the move. Neither overbought nor oversold on the 120-minute chart, so it's got room to run. We'll see if this area here holds. This is an important area, the 1695-ish range out there, and that is on the ES Mini. If I go take a look at the NASDAQ, the NQ out here, the NQ has now broken its rising price channel that it has been traveling in, the lows of which took us back to July 25th. So it's been in a nice rising price channel, been in that for, a period of a couple of weeks out here. It finally broke through that as we were coming into the 10 o'clock session here. So it's broken that with some conviction. Now, when you break a price channel, oftentimes you'll see price try to get back inside that area, at least go back up and test that. But we do have what has been really one of the strong indexes out here, one of the strong futures markets that has broken a rising price channel out there. We go take a look at the U.S. dollar index, see what is going on behind that move here right now. We're going to see the King dollar really not moving much, trading out at 81.79, still inside this green candle bar from August the 1st out there. So what we've seen is a series, 3 days of inside days out here. So the move inside gold and in light sweet crude and silver most certainly cannot be attributed to what's going on inside the currency marketplace. So use that for a piece of a piece of information. If we do go over and take a look at gold, silver, and light sweet crude right now, we're going to see that gold is trading. Well, that's a GDX. I didn't want to look at that. Not that I didn't want to look at it, but we're going to take a look at gold here. Now, I have the 30-minute chart up on my screen during the as we're coming into the last segment of the first hour of the Trader's Edge show. We were showing this area here as being a strong level of support, that being the range of 1282.40. It's right now trading at 1282.30. So price is trying to get back inside that level of support. We'll see if, in fact, that can occur. If that does not occur, what we ought to see in gold is we ought to see it move down to about the 1244 level. But right now, it is up against a nice support area and still has really thus far only made a 0.382 retracement. So still relatively impressive, even though you've got gold trading down $20 out here. If we take a look at silver, IO Silver trading off a bit, but still, really, I'm going to go ahead and expand this up on my screen, and I'm going to forget about that candle. We're going to go ahead and put a black line because gold has been, or silver has been trading with inside the body of this bar right here. That's the bar that we want to be paying attention to for the moment. That bar being July 22nd. The low of that is 1949, and we can see that price has hit that, and it's rejected it. We'll see if, in fact, silver is able to stay within inside this bar out here. If it does, that would be relatively impressive as well. So that's what's going on with silver. We go take a look at light sweet crude here. Light sweet crude pulling back. Light sweet crude traveling within its most recent bar here. That was this little breakout bar from August the 1st. We'll put a black line across the bottom of that as well. That price level is 105 10-year at 105.33 right now. Let me get rid of this A to B equals CD pattern because that is not accurate out here. Light sweet crude only did a 0.382 retracement coming off of the June 24th low, which was 92.67, up to the high of 109.32 on July 19th. So just like gold has only done a 0.382 retracement, thus far that's all that light sweet crude has been able to do as well. That level is 102.96 out there. So light sweet crude doesn't exactly look weak here, weak at the knees, and still has that 14 points, still has that price target of 114 out there, and that has not been broken. If we take a look at bonds, see what bonds are doing, you got bonds trading just slightly lower out of 132.30. That's the 30-year Treasury that we're taking a look at. I don't see anything bullish here. I don't see necessarily, I see the continued bearishness, but I don't see anything bullish in this stock chart whatsoever. If we take a look at natural gas here was trying to, now if we take a look at yesterday's session, just a little doji candle, so you'd have to be very careful with regard to any type of up bar that you would get today because any type of bullish engulfing would be easy to form since you had price basically open at 332 and close at 330, so that is a doji candle. So I'd say we have to come back to natural gas here. Looks like it still wants to seek a lower price, which will be down around the 312 level. Get back to the February 15th time frame. Now let's go take a look at the indexes, see what we have going on inside each of the indexes. Let's start off with the S&P 500. The S&P 500 right now trading at 1699.17. 1687.18 is going to be the key mark here for the S&P 500. Price right now, not a tremendous amount of damage, still just traveling with inside this bar here. All that we're really seeing take place thus far as we take a look at the stock chart is we're taking a look at the S&P 500 work off an overbought condition. In order for me to say, okay, the bearish sign is in, the highs are in, you're going to have to see the S&P 500 get back below that May 22nd level out there. And we'll take a look at the SPY, take a look at the volume chart out here. But this breakout session is important to pay attention to. That was on August 1st, that green wide-ranging bar. The low of that is 1689.42. That's why 1687.18 getting back below that would be important. So far, all that's occurring out here in the marketplace is nothing more than working off a overbought condition. That's in the S&P 500. Little different story inside the Dow 30. And you got IBM that is leading things to the downside. IBM gap down this morning. So that is what is putting the pressure. In fact, IBM, it's off about 2%, down $4. It's almost a leader in the clubhouse. But it is the Dow here, if we pull this back, that is trading below that May 22nd swing point. It is the Dow that is not just the weakest because of what it is doing out here. It has been the weakest, and it's the one that is most suspect, the one that is most subject to getting down and testing that June 24th low out there. So 15,542.40 is a key number for you to be paying attention to today. If the Dow closes below that, which it's trading at right now, says, okay, a false break topside. Now we know volume-wise it didn't have the volume to break out that May 22nd high, but that May 22nd high right now is not acting as support. But you're going to have to see synergy here amongst all of the indexes in order to truly get to the bearish camp. Let's take a look at the NDX 100. Now, the NDX 100, that's a long way away from getting down to that May 22nd high. So in this case here, what we saw the NDX do yesterday is complete the A to B equals CD up. We can see as it was doing that. If you're taking a look at my chart here on Tiger TV, if you are listening on your mobile device at TFNN.mobi or you're listening to us on the radio, thank you so much for doing that. I'll describe to you what it is we're looking at, but you can always catch the archive of the show on Channel 10 as well as a live stream by going to the homepage of TFNN.com. Over on the right-hand side, you'll see a button with three little smartphone devices. Click on that. The show will stream live. We're taking a look at an A to B equals CD inside the NDX. That started on April 18th, that low 27.30.97. The B point on this, May 22nd's high, 30.53.51, and the June 24th low was your C point, 28.25. 1-to-1, A to B equals CD. The exact number, 31.47.15. Instead, what was hit was 31.45.25, a $2 difference on a 3,000-plus instrument. Not too shabby. Now, do we have any kind of real reversal signal here inside the NDX? Well, candle-wise, it's considered to be a bear separating line. So that in itself is bearish. So we do have that. I would say I would get more intrigued on the bearish side when it takes out that August 2nd body, that August 2nd candle, either the low of 31.18 or 31.25.49. So pay attention today to the NDX 100. A close below 31.25.49 would say, something to think about. Maybe more than just working off an oversold condition out here. But a lot of time left in the trading session. Let's take a look at the Russell 2000. Russell 2000 had completed its patterns out here. Several patterns we have looked at those patterns on the weekly chart for the futures contract here. It also coming from a condition of being overbought yesterday, being at about the 69 level on the RSI indicator. So August 2nd, also August 1st in this case here is going to be probably a key bar to be watching. That would be 1051.23. It's trading at 1054.66 right now. New York Stock Exchange, let's go take a look at the New York Stock Exchange out here. We've seen the oscillator be below the zero level here. Let me refresh my screen. I seem to have lost something here. Refresh. It has been the oscillator here. How did I get that in there? Give me a moment here. I don't know how. Grid lines 8. I'll tell you what, I will adjust this chart when we get back. We'll go take a look at the New York Stock Exchange and anything else that you'd like. You give us a call at 877-927-6648. We'll be right back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 92 points right now. S&P is down 8.5. I got that fixed on my chart out here for the New York Stock Exchange. On the New York Stock Exchange, the oscillator has been traveling below the zero range. How about that? It's not. I switched off it, and it is no longer fixed. Son of a gun! How did I do that out there? Very interesting. Let me try just deleting that, see if that helps. There we go. Okay. So we've had the oscillator trading below zero. That is when the bears have control of the marketplace out here. Net declining issues as we speak here right now, up about the 1,744 level. So, the check engine light has been on the car, on the stock market here ever since price moved down below it got negative out here, which was back on, looks like July 29th out here. Not a ton of price damage here just yet, but definitely something to be paying attention to. The trend here of the overall market, you can use a summation index, the oscillator, is most certainly to the downside. So, we now know what it is to be paying attention to. The S&P 500 is going to be the key one to be paying attention to today because we know the Dow already is below that May 22nd area. The VIX is moving up. It's at the top of its trading range right now, 1252. The serious damage to any market takes place when the VIX gets above the 50-day exponential moving average. That's at 1424, so that's quite a ways away from where it is at right now. Let me see here. The S&P. Okay, so now let's go take a look at the ETF structure here. Give me a moment here to pull that up. We'll take a look at the ETFs. So we've got the SPY. So the SPY here right now is doing nothing more than coming back and testing an old area of resistance, which it broke through. That resistance was set up by the bearish engulfing candle of July 23rd. It engulfed the entire session of July 22nd out there, which was not that tough to do because that was a small-bodied candle. Nonetheless, the high of 169.74 or 169.83, it's 169.83 that really is the number of which was the old resistance. Well, price broke through that. A few trading sessions go on. August the 1st out there, and old resistance becomes what? That's right. Old resistance becomes new support. So in order for the SPYs to get a little bit more bearish out here, you're going to need to see price get below that support level. So far, the low so far, intra-session here, has been a low of 169. Let me make sure I get that right here. 169.85. So 169.85 getting into that high of 169.83. It's missed it by a couple of pennies, but that is potentially a level of support. Now, volume there is 80 million shares. So far this morning, we've done 20 million shares in 1 hour of trading out here, but it is summertime hours. Volume yesterday was only 54 million shares, so we'll see what we have out there. But on the SPY, the number that you're really paying attention to is the last area of resistance, which was created by that bearish engulfing from July 23rd. We'll see if that holds as support. That is on the SPY. If it does hold as support, that sets up that continued move up to 172.71, the 1.272 expansion, and all that will have occurred today would have been a working off of the overbought condition that existed in the index as well as the SPY itself on the daily chart. Let's go take a look at the Qs here. Let's go see what the Qs are doing. The Qs pulling back here this morning. About 4 million shares, made a high yesterday with 15 million shares. It is coming into, as far as trying to find some real areas of old resistance on this. There was a bearish engulfing candle that took place right here on July 16th, the top of which is 75.59. You're quite a ways away from that, so I don't think it's going to be I don't think we'll get the signal here from the Qs like we would on the SPY. So I'd say pay attention more to the SPY than the Q at the Qs at the moment. Qs, just like the NDX 100, basically completed that 1-to-1 A to B equals C to up at the 77.22 range, got up to 77.08. Let's take a look at the diamonds. Well, let's take a look at the IWM first. So the IWM having completed several patterns here, right now pulling back with volume of about 6.4 million shares. Yesterday made a high with 14 million shares, so we might have volume off of the highs out here with the IWM, so that would be important to be paying attention to. Most certainly. If we take a look at its last level of support, well, that really would be, I don't know, on the IWM, you could potentially call this a bearish engulfing. Let's see, you had the open at 104.48, and you had a close here of 104.46, so you really couldn't, it's trading. It's already trading into that candle. If we go ahead and give it the benefit of the doubt, that would be the July 23rd high of 104.95. So that would be the number to be paying attention to today. If you get it closed back above 104.95, you've seen a rejection of a support area out there. 877-927-6648. We'll be right back.
With the stock market flirting with all-time highs and volatility back, Now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got price accelerating to the downside here right now. You've got the Dow is off 113, S&P is off 11, Composite down 29 points, Russell 2000 off 10. Russell 2000, the leader to the downside percentage-wise, off a full percentage point right now. Google's off $3, Apple is down 1, Microsoft's off about 0.9% out here. IBM was the leader in the clubhouse on the way down. It's now Biogen, BIIB, and Celgene right behind them that are down about 450. Well, both are down 450. Whirlpool, WHR, they're off 456 right now. We'll go check in on each of those. I do have the 30-minute chart up on my screen here, the NASDAQ futures, the NQ. That has been, some of the real strength inside the marketplace. You can see that's in the extreme oversold territory, utilizing that relative strength index. Last time that the Qs were down into that range was back on July 25th, and we saw a decent bounce from there. So, we're starting to get to an area where we should start to see the market move sideways. Prior to that time down there, utilizing that relative strength, we saw the market made its lows really back here in June 24th. When we saw the last time that it was actually June 21st was that first push down when the markets were down at this level here, which is in the 20 or below 20 range of that relative strength index, relative weakness index. So it doesn't have to happen right now at 1035, but we should be looking for the market to just kind of take the pressure off a bit and work off that condition on the intraday chart out here. And what kind of bounce takes place will be really key. What you want to do whenever you start to see that take place, you want to be paying attention to whatever that candle it is that forms, and watch how price travels with inside that candle. If it just travels with inside the body of the candle as it's moving sideways, it's just really building up energy or steam for a continued move lower out there. Let's go peek in here in some of the sectors within inside the S&P 500 so we can see how those are holding up. So we'll go into, so as I can find them here on my screen. There we go. So we'll go into the Spider ETF, see what we have. Let's go take a look at the XLF. So the XLF pulling back today so far. The volume on this move, 8.7 million shares to the downside. The XLF, in order to get back into the bottom of its range, is going to have to crack that May 22nd high that's got 95 million shares out there. That price level is 20.35. It's right now trading at 20.59. That's 95 million shares so far today. Volume of 8 million shares. So it's not going to have the volume to bust through that level. Maybe it would get down and test that. If you get it closed back below May 22nd, that is a problem. I would say the XLF would trade down into the 1910 to 1949 area. That's the June 20th bar, high volume bar out there. So that's on the XLF. If we take a look at the energy sector, the XLE, it's actually holding up pretty well here this morning on this pullback. Volume-wise, 2 million shares to the downside. So that was after making a high with 10 million shares. So we've been trading for an hour. So you've got volume that's accelerating, but still traveling with inside the May 22nd swing point, the low of that being 81.75. So ExxonMobil must be trading okay here this morning. In fact, let's just pull that up on the screen here. ExxonMobil had gotten back inside of its trading range. Yeah, so ExxonMobil is actually holding up okay here this morning. And that was inside a 7-point trading range. It gapped down back into it, sets up ExxonMobil eventually coming back and testing the bottom of that range down at about the 85.02, but so far this morning it's acting pretty well. And with ExxonMobil being the leading weighted stock with inside the energy sector, the XLE, it's why we're not seeing a tremendous amount of damage here, not just yet, at least inside. Yeah, XLE is still at its session lows out there, so don't get me wrong about that. Let's go take a look at the technology sector. That is the number one weighting with inside the S&P 500. That has formed a bearish engulfing as we speak here right now. That's the XLK that we are looking at. It's trading at 32.10. At 32.10, we've got volume here so far today of 1.2 million shares out here. The XLK never making it out of the May, in this case here, not May 22nd, but really the swing point high on this was May 20th. That price level was 32.31. Put a black line across the screen here, like a black eye, I suppose. And the XLK did test that swing point high of May 20th. That was 8 million shares, 32.31. It tested it yesterday with light volume, 4.3 million shares out there. So there's your test of your actual swing point high inside the XLK. Where's the volume on this for its next test? It would be all the way down here at July 19th. The top of that is 31.69. Right now it's at 32.10. But you do have a bearish reversal signal after a test of a swing point high on lighter volume yesterday in the number one weighting with inside the S&P 500. Of course, you've got Apple. Let's just pull up the Apple chart here because that's the number one stock with inside the XLF out there. APL. My goodness. Go fat fingers. So let's go take a look at Apple, see what it is doing here. So far, not much of a movement. It's back about $1.50. Not really a big deal. Now, Apple had completed its 1-to-1 A to B equals CD. Actually got above the 200-period exponential moving average here yesterday. Closed slightly above it. That is, by the way, 468.34. Right now, it's trading at 467.75. It still looks to me Apple did get into the overbought territory. So it's doing a pretty good job of working that condition off by just really traveling sideways. Says there's actually some more energy left inside Apple to move a little bit higher out here. So Apple not reversing its course here as we speak right now, with that being the number one weighting inside the XLK out here. Let's continue taking a look at the other sectors within inside here. Let's go take a look at the XLP. The XLP is the consumer discretionary area. The XLP, that looks to have formed a little bear sash candle as we speak. Let's take a look at the volume inside it so far today. You've got volume of 591,000 shares. The XLP, let's take a look at where this may find a little bit of support out here. You'd have to say it would be the June 19th bar, the top of which is 41.30. It's trading at 41.59 right now. You do have a hammer candle inside the XLP, so real support ought to be this hammer candle. This guy right here from July 26th, the top of which is 41.55. You're at 41.59 right now. Break of that hammer candle low, which is 41.02. That ought to set price off and move down into this next gap, which is July 8th to July 9th out there. But there should be some decent support here inside the XLP at the July 26th low out there at 41.02. Let's see what other sectors. Let's take a look at the building material sector, the XLB out here. See what we have going on inside the XLB. We often don't pay attention to this, but it's trading at 40.50 right now. Volume inside here so far today, 723,000 shares. This a long time ago set up was very close to setting up a 1. It did set up a 1.618 butterfly. That was on May 22nd out here. So you can see the building material sector is weaker than the general market itself because it never got above that May 22nd level, only traded into it. As far as volume is concerned, inside this sector, you're looking at volume is at the June 24th low. So that may be where this is headed to, which is 37.78 to 38.46 out there. Let's take a look at the utility sector. Might as well go round the robin out here. That would be the XLU. That is trading out at 39.15. It also has volume back down in the June 24th area out here. So this also much weaker than the rest of the indexes, and certainly the weak inside the S&P 500. Never making it, only making it really to the bottom of the May 22nd level out here. Let's go take a look at what sectors have we left out here. The XLV, is that the healthcare sector? XLV. Let me do a quick peek. Sometimes I get a couple of them confused out here. XL. Give me a moment here. XLV. That is the healthcare sector. So that is off today with volume only 1 million shares so far to the downside. So that is acting okay. The May 22nd high is going to be its area of support. That is going to be 50.40. So about another 45 cents to the downside is where it will test a support level. Let's go take a peek here at some of the stocks that are moving to the downside. Let's take a look at, let me switch over. First, we'll start with IBM. Let's go see what kind of volume is still behind this move out here. So IBM right now trading at 191.06. It took out a hammer candle, bullish engulfing from the prior two sessions. Trading down volume-wise so far today, 2 million shares. 2 million shares coming into 10 million shares with an hour of trading. It may try to take out that area being the low of 188.41. But so far, it looks like, let me see, we'll put this on a shorter-term time frame. How about a 10-minute chart? Let's see, volume here, volume is really dissipating inside IBM. We saw big volume right at the open. Otherwise, it has fallen off like a rock. So the initial selling wave was really inside IBM, looks like was during the first 10, maybe the first 20 minutes of selling. But that is actually not picking up to the downside at all. And that's the number one weighting inside of the Dow. So did have big thrust to the downside with 743,000 shares at 940. But just to give you an idea, the last 10-minute session was 113,000 shares. So the way that volume is dwindling here inside this, go back to the daily chart, there's no way it's going to at least take out the low. Well, I can't say no way. Anything can happen. It's only an hour and 15 minutes. As of 10:45, there's no way that it's going to take out that low of June 28th right now with volume, which is 188.41. Out there. Let's see here. Whirlpool, and haven't looked at Whirlpool for a while, so let's go take a look at that stock chart. That has been on a roar. WHR is the ticker symbol. So we've got, let's see if we've got any volume off of the highs here. Volume so far today, 278,000 shares. It made a high with 783,000 shares. This does have volume also back down in that June 21st, June 24th level. So that could be where that might set up a nice actual little buyout here. If you take a look at, you ought to put this one on your watch list out here. Last time Whirlpool had moved back down into June 24th, it was testing that 200-period exponential moving average. So you've got some volume down there. Says it should test it. That might set up your next nice buy inside of Whirlpool, so long as the volume doesn't accelerate to the downside out there. Let's go take a look at the Celgene. Celgene is number 2 in the clubhouse to the downside. CELG is the ticker symbol. If we take a look at Celgene out here, a strong-looking stock for sure. Today, down with 917,000 shares after making a high on August 1st with 2.4 million shares. This has some volume back at July 18th as well as right here where it's going to trade into. This thing broke out on July 11th. Top of the breakout, or the top of the high of July 11th, I should say, is 136.36. The low of that candle, which was tested twice, was July 11th, was 131.67. So look for that to be a support area inside Celgene. A move back down to that on some light volume, that might set up a nice little buy for you. Working off an overbought condition for sure, just taking a look at that relative strength indicator out there. Let's see, what do we have moving to the upside here that is worth taking a look at? Give me a moment here to... Fossil is to the upside here. It's up $20, but I think I have a problem with my stock chart, so I'm not going to go back there and take a look at that. I never did finish that. You've got Interactive Intelligence. That's up 14%. Let's just check that out. ININ is the ticker symbol out here. So that has gapped up. That's having a nice breakout session out here. This thing is gapping up with some nice volume, too, behind this move. Nice volume for this. This is not the most liquid of stocks. In fact, we can see on days where it trades 36,000 shares out here. But today, up with 270,000 shares. Let's take a look and see what this thing maybe is trading into, if anything. Nope, it's just a little rocket ship. Boy, this thing is at its all-time highs. Looks like an IPO back into the 2005 timeframe. Release my date only goes back to 2005. But looks like everybody in this thing is in a nice, profitable position. Now, let's go back over into the intraday charts. Let's try to get a feel. Remember, we were talking about how on the 30-minute charts we had price moving into the very extreme oversold territory. So let's go see if we can see any bounces going on inside here. On the 30-minute chart. Now, we'd actually have to probably go down to a 10-minute chart to be paying attention to that. We are seeing it move off of its session lows out here. Let me just change over into a 10-minute chart, see what we've got going on inside a 10-minute chart out here. Not really much, no bullish signal, that is for sure, inside the NQ. Let me try the ES out here, see what we've got going. So inside the ES, we are taking a look here. So inside the ES, so in addition to being on the 30-minute chart into that extreme oversold condition, we're seeing a 1.618 expansion of the swing point from 10 o'clock in the morning on August the 2nd. That low was 1695.75, all the way to the high that was put in here at about 4:15 in the afternoon on August 2nd. That was at 1705. So now we're seeing a 1.618 expansion of that swing point, and we're looking at a 0.618 retracement coming into the 4:30 time frame on July 31st out there. So Fibonacci-wise, we're up against a pretty decent area of support as well as coming into a oversold condition. 877-927-6648. Dow's off 114. S&P's off 10 points. We'll be right back.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 126 points right now. S&P down 11. NASDAQ off 31. So let's try to recap where we are at the in the markets, what to be paying attention to as we come into the close. We'll start off here with the ES-Mini, the 30-minute chart. We were looking at that 7-point consolidation range, which was certainly broken. Had a price projection, a minimum price projection of 1690. We're at 1690.50 right now. Price is in the oversold condition here. So at some point in time, This is going to have to be worked off by either moving sideways or bouncing out here. The New York Stock Exchange has been flashing. The check engine light has been on here for the past several days. Today, if we get a close like this, well, especially you've got net decline in issues of 1903, the Bears will have gotten more than just first down. They will really have moved the ball downfield out there, so you need to be careful and start looking for bearish outcomes. Now, the VIX index itself is up about 9% as we speak, 8% I should say. That's up 97 cents. Do the calculations on it or go back and take a look at it. If, in fact, the VIX is up by 10% or more, 10% or more, don't try to jump in on the short side here because the data, I've got it written down, it's like nearly like 80% of the time, pretty close to 80% of the time, and that is as of the last several years out here when the VIX makes a 10% move in one day. From the prior session out there, you see a bounce in the marketplace. That's what you would look to be selling out there, would be the bounce in the marketplace out there. So now, that doesn't mean that the VIX is going to be up by 10%. It's just one of the things for you to be looking for. If you take a look at the indexes itself, on the daily indexes, you're looking for the S&P 500 to get back below the May 22nd level. It is not there yet. It would take a pretty bad close at 1687. That would be down almost another 7, 8 points out there. Right now it's at 1695. But you get back into the 1687, 18, you're back inside the lower part of the range out there. Again, so put this together by taking a look at the VIX index at that close out there. The Bears, as I've been saying here for the last 4, 5, 6 days, the Bears still in control of the market based on the wider swath, the wider breadth of the marketplace out here, and they actually showed up for work here today. As far as gold out here is up against a decent support level that thus far has held, and that is that 0.382 retracement, 1284. It's at 1285.40. We took a look at gold on the shorter-term chart, on the 30-minute chart. That area has held that support where we saw a little bit of a breakout with some big volume. That area so far today has been tested on light volume. Gold needs to get above 1270, 1286.90 here, though, to suggest that it really wants to bounce out here in the marketplace. It's at 1285.20 right now. What else should we be looking at? Let's go take a look here at the daily index future. So I want to take a look at the this is a weekly chart for the Russell, but at least from a benchmark standpoint, something to be paying attention to, certainly at the end of the week, is going to be a close below 1047.40. You're at 1050.01. Obviously, we've got 3 days left, 3.5 days left in the trading session, but that's going to be key. This is probably going to be one of the charts that will be also another significant chart for identifying a market top, because you've had the Russell 2000 being the king out here. It has formed three patterns, the most recent one being a perfect three drive to a top pattern. Now all that is needed is a bearish reversal signal. A close below 1047.10 come Friday would in fact be your bearish reversal signal. Folks, stay tuned. Basil Chapman is up next. Thanks so much for joining me. Always remember, you have an amazing power within yourself, and that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day. Look forward to seeing you in the morning. Take care, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.